Bloomberg Audio Studios. Podcasts, radio, news.
Welcome to a bonus episode of Merryn Talks Money, the podcast in which people who know the markets explain the markets. I am Merryn Somerset Webb. I am just back from a long trip home from Japan. With me today, of course, is author of the award-winning Money Distilled newsletter, John Stepek. Hi, John.
Hi, Merryn.
John, I've been away for literally a couple of days, and everything seems to have gone completely nuts while I've been away. Bitcoin
This is
in
why
particular.
you should never leave the country.
It's usually when
It just goes to pot without you.
It's usually when you go away that the market crashes one way or another. We've had this joke before. You go on holiday to Portugal, come back, everything's fallen 20%. But this time Bitcoin really has come off a lot. So it's down quite a lot in the last couple of days. It's down 25% year to date, 40% over 6 months, and close to 50% off the high it hit last year, $125,000. We went down to $60,000 at some point, and I think as we speak it's bounced quite a lot back up to the mid-60s. But this is not what people expected, and I think one thing we can say for absolutely sure at this point, that Bitcoin is not quite the same thing as gold. Am I right, or am I absolutely right?
Oh, I think that's fair. That's definitely fair.
Yeah.
Well, actually, what's interesting is Bitcoin doesn't seem to have participated in the kind of slightly manic run-up that silver and gold had, but it does seem to be participating in the very manic rundown that they've been having.
Yeah.
So I'm curious as to why that is.
So am I. And it seems really that it's not so much that it is moving around the place with gold, but it's moving around the place with software, because it kind of is software.
Yeah.
Anyway, as you and I know nothing about these things and are constantly permanently wrong on Bitcoin, we've actually invited someone on who does know something about Bitcoin and how it all works. We've got on Charlie Morris. He's on the line to try and help us make sense of all this. He is the founder and chairman of investment research firm ByteTree, and he has been on with us a couple of times before, so regular listeners will know him well. Charlie, welcome to Merryn Talks Money.
Thanks for the invitation.
Right, Charlie, what's going on?
You want to talk about Bitcoin? I mean,
yes, I do.
The best performing asset in the history of the world. Let's start there.
Yes.
You know, it comes to market at a very low market cap. So that's been, I think it was around $150,000 market cap in 2010 when it started trading at about 6 cents. We came a long way since then. And we have these thing called cycles. You know, Bitcoin goes up a lot, then it goes down a lot. And we've just, in the last 24 hours, or in fact the last few days, experienced one of the down a lot.
Okay, so why does it go down a lot? I mean, we're talking a lot, and there'll be a lot of people out there who caught this wave up, having missed previous waves up. They'll have ridden it up to 120, 125. Some people will have bought it up there. I mean, Bitcoin's not alone here. People have done this with gold and silver as well. So given that it's not moving with gold and silver, it's not the same asset, and this is one of the things we've talked about with you a lot, that it is a very different type of asset. What is it that is driving this collapse?
So there are a lot of things. I mean, I've always said that, you know, gold's a sort of a macro asset, and it's a real world asset, and Bitcoin's a digital world asset. It's always had high correlation with tech. I used to highlight that with social media stocks, because you think about it, you know, sharing pictures of cats and funny jokes on the internet and social media is not that dissimilar to exchanging value. I mean, you know, after all, it's internet activity. And Bitcoin's always loved the idea of more activity, and the more people in the network who are engaging in the space, the higher the price would go. And I guess the internet's kind of topped out. You know, last October, I think there's a pretty strong view that, actually I said it at the Money Week conference in October, that the Bitcoin, the NASDAQ had peaked, and it does look increasingly like that. And Bitcoin really is the sort of next NASDAQ on steroids, a bit like what silver is to gold. So I think that's a very simple explanation of where we are. And let's stop there. There's so many ways we can go here.
Which way do you want to go?
Well, 4-year cycle, quantum, you know, regulation.
I think quantum's actually really interesting, because that did occur to me there, because this thing where people are worried about the rise of quantum computing, and that quantum computing might somehow destroy or render worthless the cryptography that protects Bitcoin and other cryptocurrencies. I mean, how accurate is that Because I've heard different things about quantum and whether that's actually correct or not.
Yeah. Well, let's firstly disclose I'm not a computer science expert, but I do try to follow these things. And the thing about quantum is you've got very, very powerful computing. And I guess that the threat is that if you could guess private keys at a sufficiently high rate, then you'd be able to break into the system. Now, the security has been increased over the years. And the simple way to make your system quantum proof is to the techies forgive me, but I'm going to put this into simple terms, is to increase the length of the private key. So if your password become longer and longer and longer, then you need quantum squared next to break the system. Now, how quickly do we get quantum? Some people say it's imminent. Other people say it's years away. Some people say it's theoretical. But the bottom line is about 1/4 of Bitcoin wallets are not resistant to what is called the P2PK, which is basically the threat. So Satoshi's original coins that no one's ever seen them move, mined in 2009 and 10, basically 1.5 billion Bitcoin or thereabouts, in comparison to approximately 20 million in circulation, just under. And they would be under threat, and some other coins which have got old wallets. But Saylor in his results, about Michael Saylor, the head of marketing for Bitcoin, as I always say, and also the CEO of MicroStrategy Strategy, and he basically is now coming full on board with this. There's been a couple of upgrades to the Bitcoin protocol over the years. There was the Taproot and there was the Sedgwick, and these were things that the core developers, judged by the miners, can be implemented to upgrade the network. And I think,
sorry, can I just go back? Sorry, when you say Michael Saylor is now fully on board with this, what do you mean with changing the security around Bitcoin?
Would he announced in his results last night that he's going to lead a charge to do this? And basically, if you've got enough power and weight in the system, and you convince the miners to make the upgrade, then the upgrade will happen. It's happened twice before, and so I'm not worried about that. And I think to put it into economic terms, when the price was 120,000, no one cared about quantum. They went quantum schmontum. But now the price has crashed. Everyone's like, oh dear, we better deal with quantum. So they brought it to a head. A crisis is an opportunity and all that. And so the price has come down. Now quantum is front of the agenda. The upgrades to the system will happen in the coming months, possibly a year or two, but it will happen ahead of any quantum threat. And so I personally think that the Bitcoin network is not at risk of quantum because they'll do the right thing in the end, as they always have done in the past.
So back to the 4-year cycle.
Okay. Well, the 4-year cycle is quite fun because the thesis is that you mine Bitcoin and there's a halving every 4 years, and there's a big run in the 2 years ahead of or 18 months, 2 years ahead into halving, and then there's a boom, and then everyone gets bored and there's a collapse in the sort of midterms, as it were. And at ByteTree we've got this wonderful guy called Robin Griffiths, who's in his 80s now, and he's been talking about the 4-year cycle since I can remember. And I started listening to him in 1998, and he was talking about it about 20 years before that. And it was the US presidential election cycle. Okay, so let's do some 4 years. This will shock you. Okay, we'll start in 1974. There was a savage bear market in 1978. Bitcoin's not invented at this point. Gold probably is. 1982 was famously the best year in history to buy the stock market, and probably the bond market as well. Actually, huge returns followed that. 86 comes next. Now, 86, something didn't happen, which was the top. But it dragged on for another year, and then we got an almighty crash. And the cycle breaks, and you don't get your dip, then there's a little theory there. So 1990, that was a bit nasty, going into the high interest rate era. 94 was the Fed rates crash. 98, the Asian-Russian default crisis. 2002 was the nasty old dot-com low. Yeah. Are you getting interested yet?
Always interested. Love
a cycle theory.
2006, nothing happened, did it? And we had to wait 2 years, and then we had a mega monster crash in 2008 as a result of.
Hang, but if you have to wait 2 years, it doesn't count.
Hold on.
It's not a 4-year cycle. If you keep having to wait a year and 2 years,
The cycle quick.
every 4-year cycle, it was every 4 years.
Yeah, but if you fiddle around with interest rates and things, then maybe you can drag these things out a bit longer than they should do. So perhaps you fight the cycle for a bit, but then you stretch the band too far. So we got to 2006, extended to 2008. 2010 wasn't great, but we had the Greek crisis as well. Okay, and now we go into the Bitcoin cycle. So 2014, you couldn't see it in the market so much. 2014 was not memorable, but Bitcoin was down a lot in 2014.
And just to be clear, so Bitcoin was launched in 08, was not 09? Because it was straight after the financial crisis, wasn't it, that it kind of was born?
Yeah, first Bitcoin price 2010, and people have heard of it. The general public had heard of it in 2030 after Mt. Gox. So we're now in 2018. That was another stink of a Bitcoin, down 82%. Then in 2022, Bitcoin's down 74%. It was also a tech bear market in 2022 and a bond bear market. Now we're in 2026. So there's your 4-year cycle. And I'll say it's not Bitcoin's cycle, it's the it's the world cycle. And Bitcoin is the expression of that cycle because it's, as many people say, it's an expression of liquidity. And so the asset that gets hit the most is the one that's in the firing line.
So should we expect it to be a bit of a canary in the coal mine? I mean, obviously, we've seen a lot of volatility in gold and silver and also a lot on the software stocks and big tech, but that hasn't really turned up in the indices yet because there's been quite a rotation into other stuff. Should we expect worse to happen?
Absolutely, 100%. I mean, we all know we're in the biggest bubble in indexation in the history of the world. And, the 2/3 America, and within the American index, all this tech and stuff. So I think your podcast has brought that point out many times. And it's the bleeding obvious, isn't it? But everyone continues for various reasons, career risk, regulatory, so on, to hug the indices. And those mega stocks are relatively overvalued. But let's go back a few months. We saw the Spotifys and the Netflixes and those sorts of things correct, all those sort of internet media services. And now we've got the software. But the big tech hasn't really dived yet. It's always last to go. The biggest is last to go. So, I do think that we've had this extraordinary top, but that shouldn't scare you from the top stock market at all, because what we've been observing, we run these sort of momentum models every week, and we do a piece on Monday. It's called Global Trends, ByteTree Global Trends, and free to read. And basically, we've been observing this enormous rotation. And the main one is out of the US into the rest of the world. So the US, weak dollar, partly because of sluggish S&P. Rest of the world has been very strong. And then take that a stage further, we had big breakouts in consumer staples, the boring stocks, the toothpaste and the washing up liquid, as opposed to the exciting space exploration. So we're having that rotation now. And so there's plenty of stuff that can go up in the world when these big tech stocks are going down. And of course, the indices won't be very happy with the biggest stocks going down. But there's loads of global mid-small cap in faraway places. Everyone's an expert in AI and computers and shit and things.
I know, it's amazing, isn't it? How quickly that happened. Everyone went from nothing about it to being an absolute expert in, I would say, 6 months.
They're all going to be experts in Southeast Asia and Latin America and Central Europe before you know.
Oh, I'm an expert in all that stuff already, Charlie, and so is John.
And you are an expert in everything. We all know it.
This was from the last cycle.
Yeah, exactly.
We haven't updated.
We're experts, but slightly out of date from last time round. We're also experts on commodity super cycles, aren't we, John? So that might come in handy.
Oh, yeah.
But Charlie, listen, the key question really is this. Has there been any change to the long-term case for Bitcoin? So everyone thought that with President Trump's second presidency that this would be an extraordinary environment for cryptocurrencies in general. There'd be a regulatory environment that would mean they would kind of go to the moon. That hasn't quite happened. And there's also maybe competition to Bitcoin in the form of the various different types of stablecoin. And so there has been change. There are shifts. Has anything, to your mind, changed for the long-term case for holding Bitcoin?
No, it's the internet. So the internet stocks are going down. Bitcoin's caught up in that. Is the internet shrinking?
I don't understand why Bitcoin represents the internet. I know it represents software. I know it's an expression of liquidity, but anything else could be an expression of liquidity as well on a different day.
So we've got booming stablecoin industry. We've got booming computers. AI is going to, hedge funds will probably end up being run by AI. And they're not going to fiddle around with a good old-fashioned bank account doing transactions. They're going straight to crypto. And
why wouldn't they just use stable coins, though?
Well, they will, but it's all part of the same ecosystem. They're all connected. And I think that the Bitcoin, I mean, let's look at the price of Bitcoin, okay? It's just crashed down to $60,000. I think it's already 65 now.
No, it's back up to 66. Don't worry, we've got proper volatility going on here.
Yes.
We're up 5.5% to $66,267.29.
Okay.
So that's a hell of a move from 60,000 where it was overnight.
Right. So I was referring to the middle of the night, and it's already recovered quite a lot from that. We can express it in various different ways, and I think the important point is that the levels it's at now are the same levels of the peak of the last cycle. So in 2021, we were flirting in the mid 60s, and here we are in the mid 60s. Now, in the previous cycle, we saw exactly the same behavior. The price peaked at 19,000 at the end of 2007. And then in the 22 bear market cycle, in that bear market, it goes down to 15, 16, there's below. So, it's a straightforward technical analysis 101. Where your old high is the next low and that sort of thing. And forgive me, I don't really run my investment strategy on these theories, but we have a major point of resistance. We 2022, 21, which was probably the most hype cycle ever for Bitcoin. Those levels are pretty solid, and a lot of products were launched, and we had futures were well established by then, and all these things.
Okay, so I mean, because obviously the other question here is, I am an infamous no-coiner, but I would quite like to catch it on the next cycle, seeing it as I'm not having fun staying poor. So, are you basically saying that around about here is a good time to buy if you want to get in
no, this can't happen. John buying his first Bitcoin would literally mean that the whole world would implode.
It's the end of crypto when I press that button.
Don't encourage him to do this, Charlie.
Hey, John, do you ready to go?
Yes.
Okay. So let's do a bit of Bitcoin and gold, shall we?
Yeah.
Oh. Even Sid likes that idea.
And that's what Sid thinks about Bitcoin and gold. Danger! Alert!
In 2017, very briefly, one Bitcoin would buy you 15 ounces of gold. That crashed down to about 3 in 2019. And then in the 21 bull market, I beg your pardon, it got you 35 ounces. So Bitcoin, 35 ounces. That crashed down to about 9 or 10. And then earlier this year, you would have nearly got 40 ounces. You would have 39 ounces of gold. And we've now crashed down to about 14. Yeah. So, gold has had a bit of a wobble recently. Silver, a massive crash out of really strong, super strong uptrends, massively overbought, massively hyped. So they've crashed from highs. Bitcoin was already in a downtrend. It's been in a downtrend since October, since the Nasdaq peaked and the tech stocks are going down. And that's crashed from a downtrend. So you basically got, I think in the financial speak, one of them's 10,000 sigma something overbought, and the other's 1 million sigma deviations oversold. So you've basically got one super hot market, which is gold, and you've got one ice cold market, which is Bitcoin. And so, which one do you buy today? And if you think Bitcoin's going to zero because it's a Ponzi scheme, and but the 17-year-old Ponzi scheme, a bit like gold, 5,000-year-old Ponzi.
Hey, they can always last longer than you think possible.
Ponzi schemes. Yeah, it's the only Ponzi scheme with huge transparency and a publicly open blockchain and a free market and all that.
To be fair, I don't think it's a Ponzi scheme. I think that is just a lazy dismissal.
Ponzi on the heck, I mean. Is that
No, there will be no Ponzi on the head of this. It will say, Charlie Morris says, buy Bitcoin now if you don't want to have fun staying poor.
Yeah.
Right, John?
Yep, that's it.
Yeah, so I'm not really the Bitcoin you think I am. It's my night job. It's not my day job.
I know.
I'm a big kind gold guy. Yeah, so excuse the flood, but bold. Gold is big, gold risk weighted and all that. And we listed in London 3 months ago, ticker bold. Ticker bold in Germany, ticker bold in France, in the Netherlands, in Sweden and Italy on Monday. So
and congratulations, Charlie.
Thank you. Bold. And it's 2/3 gold, 1/3 Bitcoin. And basically trying to get the best out of both, because the combination of the two assets is truly magical. They work against each other. They're consistent low correlation, and it's a very powerful thing to own. And if you risk weight Bitcoin and gold to those by volatility, basically, you've got the cleanest expression of the global money supply growth out there. So when people say, "Oh, Bitcoin's the monetary hedge," no, gold's the monetary hedge. Actually, one's a risk off traditionally. Gold obviously has looked pretty risk on recently. But let's face it, it's driven by central banks more than anything else. And obviously speculators have joined the party in the last year, as John Reed was saying in your last podcast. But the central banks are the underpinning all of this. And the central banks don't buy silver and they don't buy Bitcoin. So, they don't. Yet the narratives are the same. So people say, "Oh yeah, end of the world, dollar crisis, debasement, this sort of thing." And then actually it's not applicable to any of them. They're all going up or down for their own reasons, and silver's crash from a bubble, and Bitcoin's crash from a period of weakness related to tech, very different. But you put them together, and you just get this calm expression of the global money supplies. It comes back to liquidity. The more money there is in the world, the more money is there in markets, then these things go up long term. And Bitcoin is 75%. If you take out stablecoins, it's 75% of crypto. See, this one got the whole asset class. Next is Ethereum, and then the rest of it's all pretty small. And of course, there are.
So maybe to keep the global financial structures safe, we should be encouraging John to buy a bit of gold as opposed to actually go out and buy his own Bitcoin.
Well, of course, John should buy gold. He should switch his gold to gold, because if you've got gold that's massively more than standard deviations overbought, then diversify. And you can't diversify gold with silver. So how do you have an alternative asset? Of course, you can add to your silver some S&P 500, but we were talking about alternative assets here. Yeah, we're talking about off-grid, globally neutral, no cash flow assets, which are far more interesting. And what's your choice? Something that's going to give you, maintain high liquidity and low correlation. That's Bitcoin. So bold is what you should do, John.
Yeah, there you go, John. Okay, so there we go. So Charlie, finally, the key thing we're pulling out of this is, in your opinion, it's absolutely fine to hold on to your Bitcoin for the long term. Nothing significant has changed. Whatever one thought about Bitcoin previously, one can continue to think now. But if you want to hold it in a less volatile form, maybe mix it up with gold a bit.
Well, that would be my take.
Yeah, I know. I'm repeating your take back to you just for confirmation purposes.
Yeah.
Because everyone will probably still know roughly where I stand on this matters. And John over there, who doesn't hold any Bitcoin, just for the record, of course, I do. John, I tell you what, John, in our next podcast next week, we will find out what you have done. So if any listeners have any recommendations for John, go out and buy a Bitcoin and destroy the global financial structure, or buy a nice ETF that mixes them up, or just hang on to your gold. What does everyone think John should do? Please email us about that on merrynmoney@bloomberg.net. Charlie, thank you so much for joining us today. John, thank you too. Thanks for listening to this week's Merryn Talks Money. If you like our show, rate, review, and subscribe wherever you listen to podcasts. Keep sending questions or comments and advice for John, of course, to merrynmoney@bloomberg.net. You can also follow me and John on Twitter or X. I'm Merryn SW. John is John_Stepek. And Charlie, you are at Atlas Pulse, right?
Yeah, on Twitter or ByteTree.com, BYT.
On Twitter or ByteTree.com.
Yeah.
This episode was hosted by me, Merryn Somerset Webb, with John Stepek. It was produced by Summer Sadi and Moses Andam. Special thanks to Charlie Morris for joining us on this emergency Merryn Talks Money podcast.